So, gold has been one of the most remarkable stories of 2024. It has soared.
It's not getting the buzz that cryptocurrency gets or even AI, but gold, yes, gold is hitting new highs. Investors, buyers, and sellers are all taking notice.
So Israel's war is entering a new phase. Sinwar's death has created ripples, especially in the international market for gold. Gold prices are breaking records everywhere.
This is a 1 kilogram bar of gold. A year ago, it was worth about $64,000, and today it's worth $76,000.
In the last 10 months, we've seen over 40 peaks in the gold price.
It has dipped.
I want to take a look at the precious metal prices, where we have seen gold and silver both decline quite strongly in the overnight markets there.
It has spiked again.
Gold prices have regained momentum after falling from its all-time high of 79,775 on MCX in October end to 73,300 on November 14th. The yellow metal has been on an upswing.
Last week was a grand one. You saw gold and silver prices both gain quite strongly. Gold actually was up 5.5%, making it the best weekly gain in last 2 years in that sense.
And it has fallen again.
The reports of Israel-Hezbollah ceasefire agreement perhaps nearing its yield is something that has weighed onto the market. Not just that, the gold and silver prices fell very sharply overnight. Gold fell 3.5%. Silver is down 4% in the overnight markets there. Well, Trump also nominating hedge fund manager Scott Bessent as Treasury Secretary also takes off some uncertainty.
From geopolitical tensions to a Fed rate cut to global central banks doubling down on their purchase of the yellow metal, Trump's return to the White House, and most recently, news of a ceasefire between Israel and Hezbollah, every significant move across the world has influenced gold prices and demand this year. And of course, India's eternal love story with this ancient asset continues. According to data from the World Gold Council, India's demand for gold jewelry was the strongest in 9 years during the July-September quarter. The surge in demand was of course pushed by an import rate cut announced earlier this year. So, investment on gold bars and coins too rose by 41%, the strongest growth in 12 years. All eyes are now on the upcoming wedding season. In India and across the globe, it's been a riveting story. Will the craze continue? We try to answer this and several other questions in this episode. Keep listening. It's Thursday, November 28th. I'm your host Anirban Chaudhary. This is the Morning Brief.
Gold prices in India are directly influenced by the trend in the globe. They almost mirror the trend in the global prices.
That's my colleague Gayatri Nayak, who's been tracking the economy, the central bank, and the external sector for close to 3 decades.
What decides the prices at the global markets is the pure demand supply. Now, demand supply is majorly influenced by the central banks, since as an entity, they're the single largest buyer of bullion in the international market, and they're able to influence the prices either way, depending on the quantity of the demand. Indian market is different from the global market. In terms of demand, more than 80% of the demand for gold is for consumption purposes, means for jewelry demand. It's like individuals like you and me buy gold for jewelry to meet our jewelry needs, But said the Reserve Bank never actually bought gold. It's only after 2017 it started buying gold in bits and parts from the international market. It has maybe more than 200 tons in the last 5 years.
And how does the Indian Central Bank trade in gold?
India doesn't sell gold. It only buys gold. But there are other central banks like China and Swiss Central Bank. They trade both ways. They buy and sell. See, Anirban, if you look at long-term trend, gold prices have steadily growing, but the sharp rally has started post-COVID. Since COVID, the general trend among central banks is only to buy because of various factors. The global slowdown after the COVID-19 and the tremors of war in the Middle East and the Ukraine-Russia war. what happened with the Ukraine war is US has actually freezed foreign exchange reserves of this Russia. One of the largest holder of foreign exchange reserves of over 600 billion was frozen. So to that extent, the supplies were restricted in the global currency markets, which sort of led to dollar price volatility, and that in turn prompted many investors, including major central banks, to shift to gold, which is seen as a safe haven asset and a hedge against volatility and inflation.
Globally, year to date, central banks' purchase of gold was at 694 tons, lower than the same period last year, but higher than 2022. The RBI itself bought 49 tons. Its reserves are now 6% higher than last year. Like I said, 2024 has been a record year for gold across the world. Here's Sachin Jain, Regional CEO of the World Gold Council.
In the last 10 months, we've seen over 40 peaks in the gold price. And while gold price itself has gone up 30%, the peaks of the 41s has been historic. So 2024 has been quite a roller coaster year. When the year started, we saw a quarter one which was slightly strong. We saw quarter two which was quite dampened because the price of gold was going higher and higher, and the consumer demand was sluggish. Quarter three started in the same manner in July.
And then on the 22nd of July, Finance Minister Nirmala Sitharaman said this.
I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%.
And what that did in quarter three was it stirred and impacted demand in a very strong manner. And hence, quarter three was the most interesting, which was July. We started slow, paced up in the end, and then August and September were record months. And as we go forward into the last quarter being a quarter for Diwali, a quarter with celebrations and weddings, we've seen a continued demand for gold from that perspective.
Understood. Okay, I was looking at your global charts for Q3, which is the July to September quarter. I mean, this is the chart for jewelry demand. India seems to have bucked the trend, which is shown by more than 35 countries and regions across the world that have been, tabulated in your latest report. Most other countries have actually shown muted growth or decline. While we all know about the gold and jewelry craze in India, and it's nothing new, is this trend bucking something that you've seen earlier? And if not, what is the reason for the trend bucking this time?
So quarter three was the first time that gold demand globally crossed $100 billion. It was the first time. It was absolutely phenomenal. And that was global. Now, let's zoom into India. In India, we saw a consumption of approximately 248 tons, which is up by 18%. Now, what does that really mean? 18% up on volume, but a 53% up on value, which is great. And there are really two parts of that consumption. One, which your question was around jewelry demand, which after a long period of time, we saw a growth of about 10% in volume and almost a 43% up on value of jewelry that got consumed. And the second very interesting aspect was gold as an investment demand side. And we saw in this area a 41% up in terms of volume, but a whooping 83% up on the value that we saw. But the up primarily was the surge that was happening of the gold price that went down in August. And a lot of people who had a planned purchase of gold jewelry for weddings and others got preponed. And essentially, a low quarter, July, August, September tends to be slightly low. And on that platform with low prices of gold, we saw huge footfalls of consumers coming into the stores and purchasing of things that they had planned. So it got reflected in bars and coins, which was pure investment. But we picked up hugely on the jewelry, which was perhaps more a planned purchase and got preponed.
Got it. Sachin, you spoke about a decline in gold prices, but we've seen demand rising even when prices are up.
Oh, well, it's quite a dichotomy that we're seeing in the current industry of gold. The fact that when we were getting close to Diwali, and Dhanteras tends to be a very important day of buying of gold and gold jewelry and investment bars and coins, 2 weeks before that, the prices of gold crossed 80,000 rupees. And the whole industry was, there was almost a, negative sentiment and a, very, very sort of low-lying sentiment saying, and everybody felt that at these prices, we will have a sublime and a subdued Diwali. That was a given. What we saw 8 days before Dhanteras was consumers coming in the stores, and a lot of times the pre-bookings happen in hindsight of a Dhanteras or a Diwali. So you would walk in with the family, you'll choose your jewelry, but you'll come on the auspicious day to pick that up, right? And the numbers that we are getting from the trade and from the flows of one, consumer walk-ins, second, consumers' interest, and third, the bookings had already surpassed the last year. Now, that's something that we were not expecting, but we saw that happen. And 2 days before Diwali, or 3 days before Diwali, the prices had got into a small dip. And I can tell you that small dip was the best thing that we saw, on flows where consumers bought and bought more. So in a way, you could say there is a sort of a sense of price being agnostic for Indian consumer, but we wait and watch and we are quite intelligent on when we buy. So we saw that even at the increased prices, this expectation that consumers perhaps will buy low was in a way defeated. If you look at historical science of economics, every time it's almost a correlation with the stock exchanges that when the stock exchange is high, the price of gold tends to be low. And that didn't happen this year. So there's a lot of dichotomies that we've seen in this very amazing or a crazy year of 2024.
Globally, there have been a lot of other interesting trends too, like a rising demand among millennials for gold.
Millennials actually hold the largest allocation to gold in their portfolios when compared to other generations.
People are also flocking to gold-plated investments, like gold-backed ETFs. Here's Sachin from the World Gold Council again.
Now, what's a gold-backed ETF? Every single gram or any value that you buy on ETF is backed by physical gold. So as a product, it takes care of your ownership of gold. It takes care of your storage of gold. You don't have to physically worry about it. And it's such an easy product to, maneuver and manage and store because it's in your, it's in your account on a phone. With one click, you can buy. With one click, you can sell. It's an incredible ease in which, if you look at how we buy and store gold compared to a digital product like an ETF. So it's amazingly transparent. It's a regulated product. So the risk is minimal and it's backed by physical gold. So as a product, it's great. Now, what's changing? I think what's changing is that the consumption of a newer age consumer or people getting more and more savvy with using, your Demat accounts and playing on the phone around investments is changing. And I foresee the ETF in India is going to grow extremely rapidly. So from a 40-ton AUM at the beginning of 2024, as of today, we have crossed about 54 tons. So 14-ton addition that's happened on ETFs. And I foresee that as we get even more digital savvy, as we get more financial savvy and youngsters are getting more and more financial savvy, ETF as a product is here to grow hugely.
Here's Gayatri.
So in India, there have been funds which have earned up to 25% or more in the last 1 year alone on these gold ETFs. But again, you can't term them to be stable because in bad times, the returns could even fall if prices fall. Essentially linked to prices of gold and hence risky. But now the going is good. The returns are fancy for all investors. In addition to mutual funds, the Reserve Bank has gold deposit schemes where the return is linked to the price of the gold, and also some commercial banks also sell gold deposits. So there are a lot of investment avenues linked to gold price, and physical gold have gone up without actually buying physical gold for the retail investor.
And then there's the increasing usage of gold in technology, especially AI-backed technology. Here's Sachin.
Let me give you an example of few. Today, majority of the fast AI chips, and as fast they are and the conducting powers that they need are coming from usage of gold. So, and as we look into the future, the usage of AI is here to stay, it's here to grow. And by that, the consumption that we're seeing and witnessing on industrial usage of gold is going up. So AI is one. Let me give you another example. I'm sure a lot of your listeners would have taken sometime a test of COVID. Now, every time a test of COVID was taken and it showed positive, was gold in it. It's a very interesting usage of gold. So it's getting applied in human sciences. It's getting applied in new ways of medical science. It's getting applied in space technology. It's getting applied, as I said, in AI chips, which are going to come in not in space chips. AI chips are going to be installed in small toys as we look into 4 to 5 years. So because of that, I foresee the usage of gold getting into more industrial and commercial, plus consumer goods as well.
Now, gold in the last 1 month has been pretty volatile. One huge reason is Donald Trump's return to the White House. Now, Trump has previously said that US has returned to the gold standard, where the dollar's value is directly tied to the metal, could be quote-unquote wonderful. While he has not formally proposed this, the idea has been supported by some of his advisors and re-emerged during discussions about his second term. However, implementing such a policy would require significant systemic changes and, of course, face resistance from economists and lawmakers. Now, Trump's win was followed by a slight decline in gold prices. The more obvious reason for that is, of course, a surge in the dollar and rising bond yields, which made gold lose a tad bit of its sheen. But in fact, minor tweaks like the appointment of Scott Bessent as the head of Treasury in the US government has also influenced gold prices. Here's Surendra Mehta, head of Indian Bullion and Jewelers Association.
I think gold is trying to find out, where it wants to settle, because currently there are 2-3 scenarios. For one scenario is Trump winning the election and, is liking towards Bitcoin and disliking towards the gold. The second is whether the geopolitical tension are reducing. Yes, Israel-Hezbollah war, the ceasefire has been announced, but Russia-Ukraine still exists. And third most important thing, what about the US balance sheet? What happens to debt to GDP ratio and about 35-36 trillion debt of US? So gold is trying to settle somewhere. And I think that's why this roller coaster ride is there, and it is likely to continue till he resumes.
Here's Gayatri again.
The market has factored in that Trump is going to infuse a huge stimulus to revive the US economy, and that he's going to impose tariffs on a lot of China and even some European imports. So that is going to add to inflation in the US economy. Stimulus means high borrowings by the government. Again, that could be inflationary. So over a medium term to long term perspective, it means inflation and higher gold prices. Now, temporarily, we have seen some softening of gold prices post-election results, but over the medium term and long term, it is expected to go up further, because of stimulus from both US and the Chinese economy. And there are predictions that gold might even go up to 3,000 per troy ounce next year.
And would this dent demand in a country like India? Not at all. Here's Mehta again.
Now, everyone knows that in India, gold is purchased during the wedding season. And I presume with almost 50 lakhs wedding in one season, which is a winter season, we will be able to sell about 125 to 150 tons of gold only to the wedding consumer, who are buying for the wedding season. So in all, about 250 tons every year or 200-300 tons every year only for the wedding season. So this would continue for the next 10-15 years. Volume wise, there can be little drop because of the surge in the prices of gold. But I think value wise, it's going to go up almost 8-10% every year.
And before we wind up, here's a teaser on another metal which is similarly trailblazing its way into creating history: silver.
We have seen many highs and lows of silver in the last 10-15 years. And the people who have purchased here, especially in India at 76,000, 78,000 were not getting exit for last 10 years. But now with the silver prices surging to almost ₹100,000 rupees, many old buyers have made an exit from the silver, and the new buyers are coming. And with silver being the industrial product now, which is used in the solar panels and EV vehicles, the demand for silver is constantly increasing. In fact, the study suggests that there would be a shortage of silver for the next 5 to 6 years. And every year, this shortage is likely to increase from 300 tons to 500 tons. And if you look at the silver prices in last 1 month, though the gold prices have taken a roller coaster ride, but silver prices have remained more or less in a particular range. So I think a good consolidation is happening as far as silver is concerned. I feel that gold can see a surge of, say, about 12 to 15% in next 16 months or so. but silver may see a rise of about 30 to 40% in the next 15 to 16 months.
In fact, what we can safely say is that the story of precious metals, especially gold, a story that dates back to ancient Egypt and spreads into the future of the world's most powerful technologies, that story is not going to lose its sheen and sparkle for a very long time to come. That's it for today. You were listening to this episode on The Morning Brief. It was produced by me, Anirban Chaudhary, and Vinay Joshi. Sound designed by Indranil Bhattacharjee. Special thanks to Surohini Jain for pitching in. The Morning Brief drops every Tuesday, Thursday, and Friday on an audio platform of your choice. Keep listening. All clips used in this episode belong to their respective owners. Credits are mentioned in the description.